Hong Kong stocks posted their worst weekly drop in 2 months on Friday, after U.S. President Donald Trump called off a planned summit with North Korean leader Kim Jong-Un. The Hang Seng Index fell by 0.56%, or 172.37 points, to 30,588.04, taking its weekly losses to 1.48% in its worst week since March 23. The Hang Seng China Enterprises Index lost 0.86%, or 104.87 points, to 12,047.75. Trump canceled the June 12 meeting, citing Pyongyang's open hostility, even after North Korea followed through on a pledge to blow up tunnels at its nuclear test site. It's becoming harder and harder to boost the market, as an overall risk-off market sentiment has been building up in the past few months, said Linus Yip, chief strategist at First Shanghai Securities. Chinese wind power and equipment stocks plunged after the National Development and Reform Commission, the country's top planning regulator, published a circular on Thursday stipulating that from next year all wind farm development allocations will be subject to open competitive bidding. This means subsidies for the development of renewable energy will be gradually phased out. Analysts expect the move will result in wind power prices that are lower than the current subsidized benchmark prices, moving closer towards those of coal-fueled power, which is expected to be subjected to higher environmental protection costs. It's becoming harder and harder to boost the market, as an overall risk-off market sentiment has been building up in the past few months. Linus Yip, chief strategist, First Shanghai Securities. Xinjiang Gold Wind Science and Technology, the country's largest wind turbine producer, slid by 6.70% to $12.54. China Suntine Green Energy Corporation lost 6.60% to $2.69. China Longyan Power Group, the country's largest wind farm developer, slumped by 7.25% to $6.65, while rival Wenang Renewables tumbled by 8.61% to $3.08. China Dating Corporation Renewable Power shed 4.79% to $1.59. Samsonite International plummeted by 12.38% to $26.90 upon resumption in trading on Friday. The world's largest branded luggage maker said a report by Texas short seller Blue Orca, which accused Samsonite International of questionable accounting practices and poor corporate governance, was misleading. Wuzhou International Holdings dived by 84.89% to $0.068 before suspending trade on Friday. The property developer said a report by International Finance News dated May 21 about the company facilitating illegal money collection was untrue. Oil-related stocks retraced lower, in line with a decline in Brent crude futures. CNOOC dropped 3.53% to $13.12 and PetroChina slipped by 3.04% to $6.05. Sinopec was 1.07% lower at $7.32, knocking 47 points off the benchmark index. CSPC Pharmaceutical Group bucked the trend, surging by 6.81% to $25.10, after Morgan Stanley said its share price was expected to rise in the next 60 days, noting that its first quarter revenue and net profit rose by 55% and 43% yearly, topping expectations. Defensive stocks gained, with China Resources Power Holdings adding 0.05% to $16.04, its highest level since June, and CLP Holdings rose by 0.54% to $83.10. On mainland, stocks fell further, with the Shanghai Composite Index and the CSI 300 dropping to their lowest level since May 8. The Shanghai Composite Index fell by 0.42%, or 13.35 points, to a two-week low of 3,141.30, and the CSI 300, which tracks the large caps listed in Shanghai and Shenzhen, eased by 0.28%, or 10.72 points, to 3,816.50. The Shenzhen Composite Index fell by 0.93%, or 17.02 points, to 1,810.03, and the Nasdaq-style Chinex fell by 1.84%, or 33.85 points, to 1,804.55. Technology and telecommunication stocks also ended lower. Insigma Technology slid by 5.37% to 12 yuan and 15 fen. China National Software and Service dropped by 5.18% to 21 yuan and 96 fen, and INESA Intelligent Tech was 4.87% lower at 21 yuan and 96 fen.